Alphabet just reported quarterly earnings and their shares are up 6.25%. Let's take a look at exactly what happened. So what I want to do in this video is I want to do a quick, first look at Alphabet's results. And so you can see that the shares are up 6.25% after close. The market's very happy. And, ultimately the company is trading at around 27 times backwards looking PE ratio. So it doesn't seem cheap at these price levels. However, it's interesting that they've been able to impress on the upside. Now, when Alphabet was trading around $100 per share, it did seem somewhat on the cheap side. So it's nice that the company is getting back to what I would think is closer to its intrinsic value. Now, as you can see with the segmented results, and I'll break this out even further in a second, but just to high level, you can see that their services segment up 5.5%. But the real story here is, although it's on a small base, the Google Cloud service continues to grow at high rates. And so the important part about that is that Microsoft's cloud segment only grew at around 15 to 17%, somewhere around there. So Alphabet showing 28% year-over-year growth is very exceptional, albeit just keep in mind that this is on a smaller base, so they are expected to grow a little bit faster than Microsoft. However, it is a very competitive industry, and many companies would likely want to go with the larger, more established names. So I don't want to take anything away from the success that Alphabet has done in the cloud space, or has had in the cloud space. And you can see their margins are up. Now, just keep in mind, guys, that despite the severance related costs that are in the P&L, their margins remain higher than they were last year. So just take that into account as you build out your models, because you might have to strip out some additional severance related costs as you think about, comparable year over year as you forecast this out. Now, the other thing is, notice that Google Cloud is profitable. So that's something very important to note. And here's a more detailed breakout of their revenue segment. So you can see search is actually doing well. So, 4.7% is really good for search. I was forecasting, and stretch forecasting, might I add, that search will only grow at around 5% for the whole year. So the fact that they're at 4.7% right now is very interesting for me, and it potentially hints at a stronger back half of the year. So we'll see how that plays out. YouTube, once again, a huge surprise. Remember, guys, YouTube was going backwards over the last couple of quarters. So it's nice to see that YouTube is up, albeit slightly. I do expect YouTube to be down year over year, like total year over year, 5%, but I might be very pessimistic with the way that I'm forecasting that out. Once again, you're seeing cloud at 28%, and then overall, revenues are up 7%. So once again, we're in an environment and an economy where, ad spending is pulling back, or at least we did previously see ad spending pulling back. It's a very uncertain environment. So the fact that Google or Alphabet is showing growth year over year, and part of that is being led by search, is a very bullish sentiment. And I believe that that's why the share price is up so much after hours. Now, I just wanted to quickly take a look at my model that you guys can get access to at that lower tier of the Patreon. So if you guys are considering supporting the research that's done on this channel, you can support me at that lower tier of the Patreon. You get access to all my models, including the Alphabet, Microsoft, etc. And so the one thing that I want you guys to recall is that things did slow down at the end of 2022. Notice that YouTube ads only grew at 1.4% for the year, and then Google Network member properties was down as well. And I should have highlighted this, but search was also down considerably. And so as we were going into 2023, I did take that into account, and I was relatively pessimistic on my growth expectations. And so you can see overall revenue grew around 10% last year. I'm expecting for the full year of 2023 that revenue grows around 4%, so less than half of last year. So that might be overly pessimistic. So when you look at my valuation, take into account the fact that I might be a little bit too pessimistic for your liking. And so, obviously adjust your modeling accordingly. But once again, I expect Google search to be up around 5% for the year. YouTube, once again, I still expect that to be a little bit lower. This might be a little bit too pessimistic. They might just come in at 0% or a slight increase. And so we'll continue watching that. It might just be a repeat of 2022. So we'll continue watching that, but I like the idea of being pessimistic. And then of course I expect it to surge a little bit, but you know what, as I think about, the staying power of TikTok, and now, you're going to have video on Twitter and such, I don't know how much of the ad dollar growth can get, or how much ad dollars will be growing on YouTube with a more competitive space overall, I might actually taper down my 2024 forecast for YouTube. I'm not as bullish on it as I used to be. And then, of course, Google Network member properties, this is continuing to struggle. I might actually reduce this to a 5% decline for the year, and then bring this down maybe to 5% to keep it in line with how I thought it would grow up beyond 2026. So there might be some revenue growth declines in my forecast as I sort of think about the quarter and I digest the conference call. And so overall, once again, I'm expecting around 4% right now, 8.2% thereafter, but these may come down. Now, the other thing to note with Google is that they have a ton of excess cash. So I've updated it for today's release. They have around $8 per share of excess cash. So, what it does is it reflects their very clean balance sheet, and they have a ton of excess capital. That does give them a slight uplift to their valuation in the amount of $8. Now, is all of that $8 excess capital? No, probably not. But I am giving them that uplift for the purposes of the valuation. You guys can adjust it as you wish. And so just quickly to round off this first look, yes, this valuation will change with respect to the changes that I've talked about earlier in this video about how I'm going to taper down some of those revenue expectations. But I suspect that the valuation might come down to like 140 instead of 145 or something along those lines. And so it won't change materially. But overall, I think the company's trading closer to its intrinsic value at approximately 122 or 100. I guess it'll be 130 tomorrow morning when the stock opens. So I think it's closer to its intrinsic value. I'm not necessarily buying the stock, but if you really think about it, it is a great company selling for a reasonable price. So there's a lot of you guys in the value investing space who look at that and you just say, you know what, I'm happy to just buy a great company at a reasonable price and just own it for the long term. I mean, this still remains an opportunity for you. And so let me know in the comments if you're a buyer or if you're not a buyer. I'm just seeing greater opportunities for my capital at the current moment. However, if Google does come under or drops under $100 per share, it might be one of those long-term set it and forget it investments for my portfolio. And so let me know what you guys think. And once again, if you guys have not done so, hit that subscribe button so that you can be notified of future videos on this channel. I'll see you later.